Hey folks, what a view behind me. I'm at Blackpool Markets headquarters here in Auckland, New Zealand. Speaking of views, you can get TradingView paid plans for free at Blackpool Markets, saving you up to $600 a year. Get either the Essential Plus or Premium plans absolutely free. All you need to do is trade from one lot a month at Blackpool Markets. And you can also get a 100% deposit bonus for your first deposit up to $1,000. All you need to do is click the Trading Nut link in the description below. Our sponsor Blue Guardian is the only prop firm that gives their traders a tool to protect them from hitting their max daily loss and over trading. It's super simple to use. Just set the Guardian Protector each day from your dashboard. Did you also know that they've just released an unlimited time evaluation with a 0 trading days requirement, giving you plenty of time to hit their low 8 and 4% targets, making it super fast to get funded. Plus, it's cheaper than the 40-day time limit evaluation. Check out the link and coupon in the description to get 10% off your next Blue Guardian evaluation.
What's going on, guys? It's Brings Trades coming to you live with another week of breakdowns. So let's go ahead and get into it. I know I'm doing this a little bit different than I usually do. With it being Sunday, I had a technical issue with the stream yesterday, so I'm just now getting things going. So hopefully we can get some people online. I know the market's about to open up. Shout out to Tony. Tony hopping on saying flames. And so if you guys don't know me by now, I am Brinks Trades, the resident analyst, trading analyst on the Trading Up podcast. I am one of the best futures traders you're going to find on YouTube. I've been doing this analysis, and I've been doing the analysis for TradingView for about 10 years. And, I'm sorry, 10 years. I've been doing the analysis for Trading Up for about a year, and I've been trading for about 10 years. And so with that, started my journey out in Forex, then switched over to indices on the Forex side, then made my way to futures indices, and then really just kind of just trade the futures market in general. So indices, currencies, whatever, it doesn't matter. But like I said, I'm one of the best futures traders that you're going to see online. And so I'm happy that you guys are joining the stream right now because get to do my weekly breakdowns for everybody. So I'll stay on while I'm getting this loaded up. If anybody has any questions or anything, you guys can feel free to drop them in the box as usual. If not, I'll go ahead and get set up. But I'm always down to answer some questions. It's Sunday, so I got a little bit of more time than I usually do on Saturdays. And so if you know me, then you know that I like to look at the dollar first, really just to get a better understanding of where I think the markets are going to go with dollar. And if I understand that, then I can kind of make good, educated guesses on where the market's going to go for the rest of the currency market and the indices market. So I'm going to talk about a few different pairs. Really, this kind of calls or chat or live stream, I guess, has been transitioning more to like the future side of things. So this probably will get renamed in the future weeks, but gonna probably focus more on the futures versions of these indices. So like NQ versus NAS100, right? And so the call probably will get renamed from like net US30, NAS100, and US500 pre-market analysis to like NQ, Dow Jones, right? S&P. So what I want to do is just kind of go through these things really quickly. And if you guys have any questions at all, feel free to, just kind of hop on very, very quickly and kind of shout some of the questions out. So really quickly, as we look at dollar. So again, like I said, I mentioned a few minutes ago, like look at dollar just to kind of see where we're going at for the market and then kind of get a better understanding of where the week is going to go based on that. So if we look at dollar really quickly, I apologize for the background noise. We can see that, over the past few weeks, I'm trying to get my stream tab, trading view. See if this works. I'm trying to get my tab up here. There we go. So you guys can see that the over the past few weeks, our target for last week was really this low, previous here, and so we saw that we kind of really hit this on Monday, and so coming into Monday, because we took out the low very early in the week, I kind of expected us to trade back into the range. Ideally, the best case scenario for this was for us to trade back into this overall fair value gap, and then for the market to run down. But since we took out that low very early in the week, again, kind of thinking with power of three principles, like um, you can see the market really trade back into the range for the rest of the week. So ideally, what I would like to see is the market really run up and really attack the high of last week, and then attack that high, and then really continue to go on towards these lower end targets. Again, I'm looking for the first target, which is consequent encroachment of this weekly wick. So if you go to the weekly time frame, you can see that's consequent encroachment of that wick. So ideally, I want to see the market really run for that low. That's the first target. If we get an extended run going into next week, then ideally it'll be this overarching low target here. But still in a bearish state of mind here. We really don't have a break of structure that kind of lets us know that this is going to be a full bearish move. We're really just kind of trading back into this gap. So ideally for this, I'm really looking for the market to kind of run down and continue on to that low. So let me let me stop sharing this really quickly because I'm having some issues moving around. Let me see if that did anything. Refresh this. It did not. It's weird. All right, whatever. US, let me try doing like this. Just having some issues like moving my trading view around. So let me try doing this. Let me stop share. And then let me try sharing this screen instead. Cool. So if you guys can't see my screen, just go ahead and drop the chat in the box. NASDAQ. All right, so moving towards NASDAQ, again, if we look at the weekly time frame, same thing pretty much happened on dollars. So we had this huge crash that kind of really took us to that happened on Monday. So if we look at the daily time frame, Monday was just like a crazy crash in the market. It ended up being actually like one of the worst days. I think the worst single day ever, I think, in NASDAQ history, right? Like it dropped 1,000 points in a day. So because we took out that low on Monday, again, really trading away from that low the rest of the week. But since we're looking at the overarching market structure here, we're still very much in a downtrend. And so if we look at this in gap that was formed by pretty much just Mondays, well, between Thursday and Monday's kind of, flash crash almost. We formed this imbalance here along with this additional volume imbalance inside of that. So I just kind of drew this overarching thing as the bigger fair value gap there. But so again, it's very similar to dollar. I want to see this kind of really run up, take out the high of last week potentially, and then really look to continue to go lower. We might not get that high, but ideally, as long as we're staying below consequent encroachment of this wick or of this fair value gap here, which is this dotted line, then I would like the market to continue to drop and go lower. Style. this a little bit bigger so you can see that. So yeah, so that consequent encroachment again is going to be, the area that I'd like to see the market continue to respect. You can see that we're respecting that level there currently with the most recent candle that closed on Friday. So ideally running up for this high at best, and then really kind of taking out that low. I'm sorry, that high, and then running over is good. What we're going to be wanting to see. So again, as long as the market really stays below 18,623, and this is going to vary based on what you're trading. If you're trading NAS100, it might be a little different as far as the numbers go. Taking out that high and then running lower. As we look at that 4-hour time frame, again, we did technically break structure here, but we just really been consolidating over this high. So ideally, as long as we stay below consequent encroachment, again, this idea is going to be valid, but sweeping this level and then really closing back below there is going to be the sign. So that's what I'm looking for Nasdaq. If we move to S&P, again, very much similar, same thing. You're going to see the same thing across all of these indices, really. How we traded back into this gap. We had a flash crash on Monday, or a huge drop on Monday, and trading away from that for the rest of this week. We very much still are making haven't truly broken structures convincingly enough for me to kind of want to look at bullish opportunities. So ideally, again, coming back up to the high, really sweeping that, and then kind of falling back over to continue this low is going to be what I'm going to be expecting in the market. Again, all these ideas are invalid until or valid until we take out maybe potentially this gap. So if we start trading above this fair value gap at 5,413, and very similarly on Nasdaq, then I'm going to switch to a bullish bias. But really, as long as we're staying in this space and really respecting this area, I'm going to stick with this bearish bias that we've been leading for, and really looking for shorting opportunities until that. Dow Jones is a little bit similar. It's pretty much the same thing, but similar. So again, coming into the day, or coming into the week, we got that huge flash crash again on Dow Jones. Market crashed, I think, like over 1,000 points, right? And so, with this being said, I ideally would like to see the market really run up again, take out the high of Friday, and stay below this middle gap, or this middle consequent encroachment of this fair value gap. So this dotted line is the best case, is like what we'd like to see for a best case scenario. This is a little bit different because there are additional imbalances and fair value gaps above this right here. Right. So there's technically a second one where the market could run up into. So I wouldn't be surprised if it did do something like that. But ideally, I'm still looking for price to kind of stay in this box and then go short. But if it does come back up here, still looking to short. The invalidation level for this is a little bit higher because there are multiple fair value gaps. So I'm looking for the market really to stay below this low. If we take out this, stay below this high at 40,944. So as long as we stay below that, I think I'm continue looking for shorting opportunities. But really, best case scenario would be us staying below the consequent encroachment of this gap here at 39,918. Really looking for shorting opportunities in this. So if we go to the 4-hour time frame, yeah, very similar to everything else. Like there's just not really, it's just really huge consolidation. So I'd love the market to really run up, kind of grab the liquidity that was set on Friday over these highs, and then really kind of fall down and continue to go down. So that's what I'm looking for Dow Jones. Going to Euro futures, right? So this is going to be basically the futures version of Euro USD. Couple things that I saw here. So really coming into Monday, or coming into last week, I wanted the market to really dip down into this gap. We'd set this gap with, I think, the news release on Friday or Thursday. I can't remember which one it was. I want to say it was like last Friday set this gap. So we came back here, formed a secondary volume imbalance over the top, which market is currently respecting. We dipped down into this market really, I think on Thursday, but then also very, very early on Monday as well. So we dipped into what was then the 4-hour fair value gap there. So really, if you guys follow me in the Telegram chat, and I'll drop a link for this, I ended up catching $1,000 trade on Euro futures that Monday. really just because I thought we weren't going to come back down here. Formation of an order block, right? And so we had some other clues that kind of let me know that we probably weren't going to come down there, at least in that day. So if I caught a position trading away from that. Again, I'm detailing all that information on the trading on the tick ups telegram chat. That's my like kind of like public group where I call out of my trades, and if my analysis changes from here throughout the week, then that is where that stuff will lie. So again, so the market ran into here, into this gap. I was like, okay, cool, we probably have a really good opportunity for us to trade away from this. Caught the trade up to the high, taking out this high here. um, but really what we did is we dipped down again, right? We dipped down into this gap a second time, and that really kind of constitutes the daily dip into the overarching fair value gap, maintain the high here. And so really for Friday, we didn't really get too much momentum. There was a lot of news that happened earlier in the week, really caused us to really just kind of stall. But we're respecting this overall volume imbalance after dipping down into here. Best case scenario, we would dip down one more time and then we would look for opportunity to buy. But I'm also looking at a couple levels. The secondary level here is consequent encroachment, which is lined up pretty much with that fair value gap. So best case scenario, we might come back down here one more time, tap this level, maybe not even close this level, but tap, come back into this range and looking for opportunities to buy. So looking at a few levels, um, the low of Friday, the consequent encroachment of this wick here, and then which is obviously lined up with the top end of this fair value gap. So these are the two levels that I'm looking for the market to really run to, for opportunities to potentially buy, and then really kind of take things to our overarching weekly target, which will be the high that was set on Monday. But then also looking to see how price reacts at the consequent approach from this wick. If we have a hard time breaking through here, if we have a um, if we fail to break through price here, then I'm gonna probably kind of chill. And if I'm in a position, kind of take the position off. So that's what I'm looking for Euro futures. Pound futures is probably the one that I'm most excited about, because this is again the futures version of GBP USD. But at the same time, the setup here looks a little bit nicer. So if we go to the weekly time frame, again, we go to the weekly, we can see that we dip back into this overarching imbalance here. Um, yeah, we dipped back into this overarching fair value gap here, and really have consistently closed under consequent encroachments. That's what's going on the weekly. So that's boding very well. These long wicks are kind of letting us know that, hey, the market could potentially be reversing here. Again, we dip down to the daily. We really respected this overarching fair value gap here, closed above it, which is a good sign that bullishness is going to be back on. Again, if you're one of my students and you're watching this, you guys know exactly what this means, right? If I draw this line there, and why we should pay attention to this. So that's another reason for bullish confirmation. And then in addition to all of that, really just the idea of our dollar projections going lower. So that's kind of, another clue that, pound futures could be running higher this week. So dropping down to the 4 hour, we actually did get broken market structure here. And so we traded down to just below consequent, or just above consequent encroachment of this 4 hour fair value gap. So it's also another good sign. So I'll really be looking for the market to really run for maybe potentially another retest of this gap to start the week off. And then, going into the rest of the week, really looking to take out these highs. This will be the weekly target at 1.2809 for the week. Again, I'll be looking to see how we take out this high. And depending on this high, I'm going to be long-term bullish, if we have a strong running through this high as well. So for my students, these also would be REHs. If you don't know what that means, ask me about my mentorship and I'll get you in the loop. But again, my students, just like I break down these charts, pretty much every week for everybody, my students are also very fully well capable of breaking down these charts from the weekly down to an entry. So it's really cool to watch the progression. If you guys are interested in being part of the next mentorship, shoot me a message on Telegram. And that Telegram channel is Tick Ups, and I'll drop the link to that in a second. Really quick in the comments, Axel Adida says, "Good sir." Shout out to you. let's see. So yeah, so that's pretty much all I have for pound futures. If you guys have any questions at all, let me know. But ideally, I am looking for it to reach back up to this weekly target here at 1.359. But really, a couple targets that I'm looking for. First, obviously this high here, our weekly target for the week, and then in the long term, before we get to this weekly high, I really want to see how the market's going to react at this equilibrium level here. So I'm going to draw this. Oops. Which is equilibrium. And just kind of have that as a level there noted as well. But ideally, I want to see the market really run to this high. It's going to be the target for this week. So with that being said, that's pretty much all the breakdowns that I have for this week. If you guys have any questions at all, feel free to let me know. I can stay on for a couple minutes. If not, then I'll drop the link to the Telegram chat. And feel free to add there and ask me any questions there. If you're interested in the upcoming mentorship that I'm going to add, that I'm going to have, then feel free. You can always ask me about that too. So let me edit info. Let me see if I can find the. I guess I can't. So if you search Telegram for tick ups, you'll be able to find me in that chat. Info. Let me drop it in here. Yeah, that's not working. But yeah, I would say you also can find me on social media at Brinks Trades. So if you have any questions at all, look for me at Brinks Trades there, and then you can always ask about those things as well. So it's a little bit of the breakdown. If you guys have any questions, again, I'll stay on, but I'm gonna turn off my camera. And yeah, if you have any other chart breakdowns you want me to do, I'm also welcome to do that as well. So let me know. Again, the camera's off, but I'm still here. All right. Thanks, guys. Catch you next time. And again, as always, feel free to meet in Tech Ups chat with any questions. Thanks.